Hello, welcome in from Sunnyvale, California. I'm Mark Vierra. Welcome into my technical analysis video and taking a look at the week that was. We're down 3% for the month and quarter, 2.65% for the week, and we're 4.3% off of the 1897 highs. Had a nice bearish week, which should be good news for bulls and bears, and gives some opportunities in there. HotStockMarket.com is where you'll find my weekly trading log. And let me queue up first, just a quick look at the monthly chart. Okay, the current monthly candle is bearish, engulfing the previous candle. I have a trend line that I've drawn in here, catching some of these low down thrusting candles to see where sort of a soft support here, psychological level 1800. Take a wide lens view of the weekly. I got this blue dash pivot and a broken trend line down here. Zooming in on that weekly chart, and see how this upthrust candles, we had a nice little upthrust, sold off the next week, and we even had more of this upthrusting action and even a bigger sell-off this week. So those upthrusting candles are good candles to pay attention to, that's for sure. Got this also, just like on the monthly, I'm catching these lows here, and also along with the monthly coinciding with that 1800 psychological area. I think that's just going to be a kind of a soft support. We'll see. Now, I had this symmetrical triangle drawn on here on the weekly, and again, it's like these chart patterns. You get the false breakout out of the chart pattern, and previous to the resulting move was down. Got previous tops can be bottoms. So we broke through that one. Broke through this yellow dash was a main trend line, and so just like on the previous chart here, this is another line in the sand, and I do think we'll see test of that level this week. I think when we get into chart patterns, I'm seeing ABC corrective moves potentially in everywhere. So next chart's up. Let's take a look at some Fibonacci numbers real quick. Always like to emphasize the 50% level. Okay, that's usually a good spot for support, but we're kind of breaking down below that. So 61.8 is the next fib number. Also kind of coinciding with this little consolidation area. And these little whoop-de-doos can also provide key support levels. That's down there at that 1800 level. So not gonna read too much into fibs or even moving averages. Take a look at the moving averages. Near-term moving averages are falling. That's all I can see off of that. Longer-term moving averages, however, getting kind of interesting. Now, it's not like I would trade a moving average, but it gives a nice kind of a landmark, like this previous down here pullback was down at the 150-day moving average. If I go further back, 120 about in right here is also another where pullbacks have found support, reversals. So moving averages, not going to read too much into it, but we have a falling 20-day moving average. The 50-day is kind of leveling off. All the longer-term averages are still rising. But the 150, that's where I'll really start wanting to pay attention to volume to see if we start getting in kind of climaxing around in that area. Now, I mentioned ABC patterns. Okay, chart patterns. I'm looking at the potential for, I got a kind of a small right shoulder, but I think we can qualify that and put our neckline down here. And what we saw was we saw a measured move where this section in here is an ABC corrective move up, and I measured the distance between here and here is pretty much almost exactly the same distance between the final leg down lower. So we did complete a measured move. And necklines, oftentimes you'll see a test of resistance at that neckline before another move lower. So I'm sort of suspecting, and not just because of this, and I'll get into that in some other charts, but it would not surprise me at all for the market to test resistance here before completing another measured move lower. I'm seeing lots of bearish indications, some bullish. Here's measurements on that head and shoulder pattern. Get us down to 1808, or equidistance would be around the 1780 area down here. So if I had to guess, I would say the market would hit the resistance neckline here before completing possibly an equidistance head and shoulder move. So get into volume now. Let's take a look at volume. So here's what I'm reading into volume. We had some above average volume on the move lower. Now it's declining, but not a whole lot. But now we got a smaller candle body, so that's telling me that the brakes are being applied. It's less of a bearishness. So this point of control would almost coincide with that neckline of the head and shoulder pattern. So again, it wouldn't surprise me to come up and test that point of control before moving down to the intermediate term trend line. And this high volume node also is sort of a clue to where I might see some volume kicking in here up to what I would consider climaxing volume. So along with climaxing volume, I would hope to see some down thrusting action. Some supply tests being bought up would confirm a successful test of supply. So that's that's what I'm looking for this week. I think probably see early in the week test off of the point of control as a resistance, and I think we would like to see this area being tested. Now when I get into a composite, I have also some other interesting things to note in some volume composites. So let's see, what's the next chart? Let's get on. It's the other indication of how the market is slowing down. These long composite profiles are a fast-moving market, and now that this bell curve here is building up structure, tells me that the market is slowing down a bit. So it's less bearish. I'm expecting some. Let's see. I had a weekly chart here. So another reason why I'm considering lower prices too is the weekly volume is steady. I suspect a large volume spike yet to come. So I'm not seeing levels of volume that tells me that we're done with the bearish move. It's still looking bearish to me. Now I look at an hourly intraday chart. I had a little, these moves upward are just being sold. But here's a pretty good volume that's, putting the brakes on. Just just slowing the market down, but I still think it's the trend is lower. The main chart I'm looking at is the monthly composite profile, volume profile, and I'm noting these areas where we had built up a bell curve on these 2 months, okay, and then the market sped up and it sort of forgot about these areas. So this month I am guessing that we're going to move lower and start to build. The market wants to find a base level, and I don't think it's found it yet. I see it's slowing down. I can see some spikes on intraday volume, but I think these previous areas that had built up a respectable structure, these months is missing. Had a nice structure on this month, so it's sort of surprising that we didn't find more support out of that area. And I suspect now this high volume node we'll see a shift of the point of control down lower to this high volume node, and that's another reason why I think that these are important areas here for some volume at that price, to build some structure there. So that's what I'm looking at in volume, and take a look at the VIX. We're increasing on this move up. We've got a smaller candle body, so another measured move. I think the VIX will end up being lower, stocks will be higher before the VIX makes another move upward. Okay, and then we'll go into U.S. Treasuries, same thing. I think that the U.S. Treasuries are stalling out up at these, not seeing a lot of demand, and not a lot of supply entering the market either. So I think Treasuries might start the week lower, and I'm looking at this as some reaccumulation here. This is some good volume that's supporting Treasuries above the 3-month point of control. So I'm bullish ultimately on U.S. Treasuries. I think we haven't seen them move higher yet on U.S. Treasuries. So that's yet another ABC correction within a measured move. Same thing with the U.S. dollar. I see the U.S. dollar is slowing its momentum to the downside, but on lower volume. So there's no climaxing volume to tell me that the U.S. dollar is done making this move lower. So again, here's another ABC before another measured move lower. And same thing on the euro. I'm seeing it all over the place. I think going to see a little consolidation to the downside on the euro before the euro moves up. And now the euro correlation is breaking down along with the U.S. dollar, which does my heart glad to see. The U.S. dollar is, lately it's been following the same good or bad news that stocks are following. So I think that's a good sign ultimately. But for this week or even the week after, I don't know if it's necessarily going to be this week or the following week. But that's what I'm expecting. And I think I'm going to call this a video. You can find me, HotStockMarket.com. It's got a good intraday discussion thread for day trading purposes, and a little mention to Reddit, subreddit StockMarket, and I will have these images up on my weekly trading log here soon. I've got links for you YouTube users, and off my trading log I've got other referencing links that you can check out, get some good information there. And that's it, and I'll see you on the boards.